Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those of you out there who have subscribed to the channel. I really do appreciate it. Over 500 subscribers, and the channel continues to grow because of people like you. And if you have not joined the Vested Interest community, go ahead and hit that subscribe button down below and the notification bell so you are notified whenever we get any new videos posted. Help me get to 1,000 subscribers. That is when you can monetize a channel on YouTube, as well as hours watched on the video. So keep doing that. Share with anyone you think might find value, and drop a comment down below. Let me know what you think of the video. We are a dividend growth investing channel. This video here will be a portfolio update. We did add $1,537 in new capital to the portfolio. So let's jump into the video, see what dividends were paid out, if any options we were in this week, as well as my new purchases or sells. We cover those as well. It's all out in the open, fully transparent. You'll see my full portfolio spreadsheet, all the positions I own, and all the stocks associated. So let's jump in. So as you can see, we did start some activity on the 10th, but then it expired on the 14th. It was a put option, right? So we had a put option for HPQ. We had a call option here in the HPQ position was called away last week. So now we're doing puts to buy back the position. We put in at $28.50 strike price. It closed. We did not pick up the shares. It went up, right? Not back down. So it's in the $29 range. We'll probably do this again all over next week. And do another put option, but we raised $15.45 in option premium, and that goes back into the cash portfolio and will eventually be reinvested back into the portfolio. So that was April 10th, and then like I said, that's when we opened it, and it expired on Friday the 14th. Next up, we did open another call option for Cisco, ticker CSCO. This is out of the information technology sector. It will close on May 19th, right? So if it hits $55 per share, we will sell that. I'm comfortable selling Cisco at $55 from now to May 19th. So if it closes above $55 or above, then we will need to sell it. If it closes below that, we will keep this $27.45 as well as our shares. And if it gets called away, just like with what we did with HPQ, we will turn around and do cash secured puts. So that $27.45 gets added to that $15 and some change, and that will be reinvested next week as well. And that was on April 13th. Well, that wraps up the options portion of the activity this week. And the first dividends rolled in on April 13th. Medical Properties Trust, ticker MPW. It's a REIT out of the elderly care sector, right? That's their bread and butter. And it paid out $127.76 in dividends. We do have the DRIP set on, dividend reinvestment plan. So that means as soon as any position in the portfolio pays out dividends, in this case, it was Medical Properties Trust, the $127.76 goes right back in and buys more shares of the same stock. So we picked up 14.87314 shares at $8.58 or $8.58 and some fractions of a penny. So April 13th, $127.76 in dividends, and that added $17.25 in additional passive income. These shares will again add to that snowball effect as the positions in the portfolio accumulate more dividends when they pay out dividends, or more shares whenever they pay out dividends. That's how that snowball effect increases. Now this is on cruise control. If I didn't add anything else to MPW, it will pick up around that 14 shares, depending on the cost basis, 14 shares every time they pay out. So 3 more times this year. All right. So again, $17.25 MPW dividend on April 13th. More dividends rolled in on April 14th, and that was my brother's birthday. Happy birthday, Chase. That is my younger brother. I have one older brother, Joe, as well. His is in May 19th, whenever we saw that Cisco Systems call option expires. That's actually his birthday, May 19th. And on this day, we had, and this is not right, the dividends paid out is much more than that, $76 in Leggett and Platt. That went right back in and picked up 2.41874 shares at $31.77. And Leggett and Platt, ticker LEG, is out of the consumer discretionary sector. And Realty, the monthly income payer, paid out $27.26. And That is ticker O. Realty Income is ticker O. This is another REIT. So all told, 78, that'd be about $100 and some change here in dividends, not this 56.23. That's from last week. Excuse me for not changing that. But all told, these two new dividends here paid out, and these shares added $5.60 in passive income. Next up, we get to the actual new purchases of the week, right? So April 11th, we did all of our purchasing. Earlier in the week, we invested $1,537.88 in new capital, so that will add to that snowball as well, right? New capital as well as the dividends, as well as now with options. This will help that generate that snowball faster and faster. And, excuse me, with this $1,537.88 in new capital, we picked up 10 shares of Bank of America, ticker BAC. This is out of the financial sector. And we picked up those 10 shares at $28.56. We added 4 more shares to our Stanley Black & Decker position, ticker SWK. This is out of the it's out of the industrial sector here. We picked up those 4 shares at $78.82. We added 4 more shares to our Whirlpool position, ticker WHR, out of the consumer discretionary sector. We picked up those shares at $134.31. And we added 2 more shares to our Union Pacific, ticker UNP, out of the industrial sector. I like UNP under $200, so I'm going to continue to add to them so long as they are, even though this is a little bit over my cost basis. And all told, these additional shares that we added this week added $60 in very rarely do you get a even out number like that. Usually it's some change in there, but $60 even. So total invested $1,537.88. These new positions we added with that 1,500 added $60, and then the dividends paid out made up the rest. And all total, $82.85 in new passive income added to the portfolio. Very nice to see this. Basically, my monthly income is increasing by about $60 on average. I know it's a little over now, but sometimes it's under this $82. But right now it's on average about $60 per week. So if you think of it as every week I get a raise by about $60 for the year in my annual income, that is the pace that I am on. So very nice to see that growth over time. Now, next up, we will go through the sectors, what percentage each sector is in my portfolio. On the left here in this pie chart, on the right, you can see the similar information, the percentage, but it also gives you the breakdown dollar-wise, so how much I have in each sector, and the total of the portfolio currently is sitting at $130,561.78. And then you can see how it's broken out by each sector, how much I have invested in each sector there. And you'll see that here in the next slide as well. A quick up, communications is at 9.58% of the portfolio. Consumer discretionary is sitting at 9.7%. Consumer staples sitting at 6.06%. Energy is sitting at 8.21% of the portfolio. Financial is sitting at 11.27%. Healthcare sitting at 9.20%. Industrials makes up 10.63% of the portfolio. Technology sitting at 9.25%. Materials is sitting at 12.56%. No utilities, still waiting for some pullbacks here in the utility sector. And last, REITs and real estate is still the largest piece of the pie, sitting at 13.53%. Again, you can pause it and kind of look at how it's broken out by the monetary value as well. Now here, like I said, full transparency, this is the spreadsheet that I use to track all of my positions, right? The ticker of each position, total shares I have of each position, current share price as of the close of business on Friday. The market value, current market value, is just the total shares times the current price. My average cost per share is this column here. My purchase price is just my average share cost total times the total shares. Whether I'm up or down, total return. So if I'm in the red, I'll show that. If I'm in the green, right, I'll show that as well. So my biggest losers right now is Bank of America, down $1,500. Leggett & Platt down a little over $1,200, and Verizon down a little over $1,000, right? And then a couple other ones that are down. For the most part, a lot of positions are up, but the overall portfolio is down 1.32%, right? And then you can see the sector that each position sits in, whether it's a quarterly payer, monthly payer, or semi-annual payer, and how much they pay out per share. The current yield, total down here at the bottom. My yield on cost is right here. and the portfolio weighting. So we saw the sector weighting in the last slide. This gives you by position, right? What position is Ally? It's 3.43, and you can go right down the list here. The largest positions in my portfolio are Bank of America, Johnson & Johnson here, and this one right here, 6.3, Verizon, right? And then Whirlpool not far behind. Same with Cisco, not far behind. So you can kind of pause this and look through everything. Johnson & Johnson, like I said, the largest. Leggett & Platt, one of the larger positions, or I'm sorry, LyondellBasell, one of the larger positions as well at 8.26%. So those are some of the larger positions there. You can also see the annual income, estimated annual income. I know my big head here covers up a few of those, but you can do the math, right? Multiply 166 shares times 0.3, that'll give you that. What month they pay out. And this over here is the growth of the dividend for each position. I know some of it's covered up by my head, but the average is 7.46, and that is not exactly accurate. That would be if these were all equal weighted. I know that some of these are not equal weighted, so I really need to figure out how to do that math by the weighting of the portfolio as well. I'll figure that eventually. And the totals down here at the bottom, currently sitting on 3,611.998 shares. Market value of the portfolio currently $130,561.78. My purchase price is $132,302. So again, I'm down a little bit, down $1,740.60. 1 point, that equals a negative 1.32%. Current yield is 5.047. My yield on cost sitting at 4.981. Very nice yield on cost and current dividend yield for the overall portfolio. Anything above 3 is great in my opinion, so this is really nice to see. I am looking at some other positions that are a little lower yielding, faster growing, so this will come down a little bit as I add those into the portfolio. I'm just waiting for the right buying opportunity. And this, in my opinion, is what the portfolio is all about. The dividends paid out annually, I am up to $6,589.65. And whether the market's up, whether the market's down, whether the market's floating sideways, this continues to grow as I add new capital, as the positions within the portfolio pay out dividends and buy more dividends of those shares that pay out. And as we buy options, that's another way that will increase our cash flow there as well. And then, like I said, the overall portfolio is growing somewhere around 7.46%. I just need to figure out how to weight it, right? This is if they were all equally weighted, but I know there's a way to do the math. I just haven't figured it out yet. My wife is better at math than I am. I'll just be completely honest. If you can pause it, go through these at your leisure. Really appreciate you stopping by. Let me know in the comment section down below what positions and what dividends were you paid out this week. Do you do options? Are you playing any options in your portfolio? Let me know down in the comment which ones if you are. And that is it for this one. Really appreciate you stopping by. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Hit that subscribe button. It really does help out a small YouTube channel like me with the YouTube algorithm. Help me grow. I need to get to 1,000 subscribers at least to be able to monetize the channel, have another source of income, and that is really what I'm trying to do right now. This is just a pastime that I like to share. Hopefully it helps you guys out. Hopefully you can see. Again, I grew up in a double wide trailer. I did not go to college for investing, any of that. Anyone can do it. If you know how to read, if you can do simple math, a little bit of research, trust yourself. And if you don't want to do individual stock picking, look at some ETFs or index funds. It is a way to get into the market. Look at some big players, 13Fs, get an idea of what they're investing in, right? You're a quarter behind, but at least you can see where they're investing their money. Warren Buffett is much smarter than me. I watch him. Ray Dalio is another one that I like. You can look up their 13Fs. Berkshire Hathaway is Warren Buffett's, right? So there's one. There's several others out there. Pick out your favorite investors and check out their 13Fs quarterly. You can see exactly what they're buying. That's one of the things I watch and gives me an idea of items to look at. Another one you can take a look at is stocks that are at their 52-week low or close to their 52-week low. I try to buy anytime a stock that I like is within 15% of the 52-week low or below my cost basis, right? To bring down my cost basis, bring up the yield, and bring up my future potential returns. Well, that's enough rambling. One last thing I'll say, I took this snapshot the other morning. We're about to start getting ready to redo our yard here. They're going to level out. They dropped a piece of equipment here on Friday, so they'll be leveling out the yard. And I think next week they'll be digging the new sprinkler system that we're putting in the backyard. And then the sod will be pending the weather. I think we're going to be getting some rain next week, so hopefully it holds out long enough for them to get the sprinkler system in and re-leveled. and then we would just be waiting for sod and the backyard to be done, and my dogs can finally go out back and run around again. Well, that is it for this one. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you're having a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and temporary purposes. Investing involves risk and money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.